Golden State, California, once synonymous with dreams turning golden, with a life of luxury and endless opportunities. But today, that dreamy landscape is shattering. Interest rates are hovering, housing listings are surging, insurance costs are skyrocketing, and home values, they're plummeting at an alarming rate. This isn't just a simple market correction, it's a harsh reality check happening right now. From Los Angeles to Irvine, 10 of California's most iconic cities, once epitomes of wealth and luxury, are now teetering on the brink of a full-blown housing collapse. Irvine, once known as a perfectly planned city, is now seeing its flawless image fracture. Active listings have surged by over 60% year over year. Homes that used to sell in weeks are now lingering on the market for more than 45 days, and prices have dropped by 6 to 8%. Meanwhile, mortgage payments have ballooned to $2,800 to $3,200 monthly. The primary culprit is overbuilding. Developers flooded the market with thousands of new units, but demand cooled, remote work patterns shifted, and soaring insurance costs are making it nearly impossible for first-time buyers to qualify. A corporate exodus is also playing a role, with tech firms slowing expansions and office vacancies hitting record highs, creating a ripple effect in the housing market. California's capital, Sacramento, was long the refuge for those fleeing the high costs of the Bay Area, but that escape route is now blocked. Housing inventory has surged by 50% since 2023, with over 5,000 active homes. Median prices have fallen from $520,000 to around $460,000. Even popular areas like Elk Grove now see homes on the market for 49 days, nearly triple what it was 2 years ago. Overbuilding is again a major factor, as entire suburbs emerged without corresponding wage growth. Mortgage payments have surged, insurance rates have doubled, and buyer incentives have vanished. Even rental landlords are feeling the pain, with spiking vacancy rates and dipping rental income. Palm Springs, once a vibrant hub of mid-century glamour and celebrity hideaways, is now starting to feel ghostly. Home values are down 10% from their peak, with a $900,000 vacation home now selling for $770,000 or less. Inventory has doubled, sales volumes are crumbling, and homes are on the market for 65 days, not weeks. This is more than just a sell-off. It's a systemic shift. Short-term rental income has fallen 14%, and insurance premiums for desert fire risk have exploded to over $12,000 annually. Luxury buyers are pulling back, and city crackdowns on short-term rentals are shrinking owners' return on investment. San Diego, once a symbol of laid-back luxury, is now facing a storm in its housing market. Inventory has surged to a 10-year high. Median home values are down 7% year over year, and price cuts in neighborhoods like La Jolla and Claremont range from $50,000 to $150,000. This former seller's paradise is now a desperate game of discounting due to oversupply from the 2021 to 2022 boom. Interest rates near 7% are pricing out families, and even military families are struggling with unaffordable monthly payments and inflated insurance rates, which now exceed $9,000 annually. Tourism is slowing, tech layoffs are hitting hard, and the city feels paused. Malibu, known for its cliffside estates and celebrity hideaways, was once considered untouchable. Now it's on the market, but few are buying. Listings are up 70% in just months. Luxury properties once priced at $5 million are seeing markdowns of up to $1.2 million. Insurance is a nightmare, with policies for oceanfront homes averaging $20,000 to $28,000 annually due to fire risk, sea level rise, and coastal erosion. Appraisals are coming in low, buyers are backing out, and some banks are even pulling out of Malibu entirely. Even celebrities are selling, and investors who bought multiple rentals are now struggling as bookings have dropped nearly 40%. Malibu is fast becoming a cautionary tale of what happens when paradise becomes uninsurable. San Francisco, the tech capital, once a gold mine of innovation and property appreciation, is now the heart of California's housing collapse. Home prices have dropped a staggering 14% since 2023. In areas like Soma and Tenderloin, sellers are slashing prices by $300,000. Tech layoffs continue, office vacancies haunt downtown, and many businesses are closing permanently. Earthquake safety retrofit mandates have added $100,000 or more to renovation costs, and insurance premiums are exploding. Lenders are hesitant, leaving many homes unsold, unrented, and uninsured. The investor class that once propped up the market is fleeing, and new buyers are scarce. San Francisco is now a stark reminder of how quickly equity can evaporate when the tech industry weakens and confidence dies. Venice, once idealized by Instagram and tech expats, is unraveling under the pressure of a broken market. Inventory is up nearly 70%. Homes that sold for $2 million in 2022 are now at $1.5 million and still not moving. Climate reclassifications have labeled parts of Venice as high-risk flood zones, causing insurance premiums to jump over 60%, with some owners paying $10,000 plus annually. The Airbnb gold rush is over due to stricter ordinances, fewer tourists, and higher taxes. Investors are panic selling, while rising homelessness and crime are pushing potential buyers away. The dream of walk to Abbot Kinney, live by the canals is fading as remote work shrinks and buyers prioritize affordability over lifestyle. Calabasas, the hub for celebrity compounds, is becoming less of a sanctuary and more of a stress test. Luxury listings have nearly doubled in a year. Properties once considered elite investments, priced from $4 million to over $10 million, are sitting on the market far longer, with 15 to 18% markdowns now routine. Days on market average 103 days. A celebrity exodus as remote work fades is a major factor, leaving lavish mansions idle. The wildfire risk means insurance premiums exceeding $18,000 annually for some estates, compounded by required fireproof retrofits and newly passed mansion taxes. Even the ultra-wealthy are hitting pause, indicating a significant market reset. Beverly Hills, the epitome of opulence, is losing its shine. Inventory has ballooned 90% year over year. Multi-million-dollar estates are facing price cuts of up to 25%, with a $12 million property now struggling at $9 million with no offers. Days on market have surged from 60 to nearly 100. International buyers, once a core pillar, are hesitating, with a 50% drop in cash deals from foreign investors. High insurance costs, $12,000 to $20,000 annually. Due to fire and flood risk, utility upgrades costing millions, and proposed state mansion taxes are spooking buyers. Wealthy families are now looking to relocate capital outside of California, finding the state's red tape and rising expenses increasingly prohibitive. Los Angeles, home to stars and dreamers, is now entering the third act of America's housing drama. Crisis. Inventory is up a staggering 75%. Median home prices are down 16% from the 2022 peak, with some neighborhoods seeing dips as steep as 25%. Multifamily investments have gone cold, foreign investors are gone, and Airbnb is struggling with host income down 30% in tighter regulations. Insurance premiums topping $10,000 annually, even for properties miles from the coast, are forcing many landlords to quietly sell off. The entertainment sector is slowing, with studio jobs down and production delays. Inflation and energy bills are making even affluent families rethink their living arrangements. The political landscape, with rent control expansions, eviction moratorium extensions, and new taxes targeting high-end properties, is scaring off everyone. The LA premium, that extra tens of thousands buyers once paid for the dream, the beach, the lifestyle, no longer holds the same weight in 2025. Los Angeles is no longer just a city, it's the epicenter of the California crash, and its ripple effects will be felt across the state and country.